no trader wins 100% of the time. Sometimes, I'll do these videos, and sometimes I like to drop a poll, and it always shocks me. I've done polls where I'm like, do you think a 100% win rate is possible in trading? And sometimes I've gotten as high as like 30 to 40%, and it always gives me anxiety. I'm like, man, these people are going to struggle. No trader in the history of time, and no trader ever in the history of time, will have a 100% win rate. If you trade once, okay, if you make one trade in your career, maybe you'll have a 100% win rate. But if you're placing 2 or 20 or 200 or 2,000 or 20,000 trades, you're never going to have a 100% win rate. And the difference between pros and amateurs is knowing that and respecting that. So when you're holding a stock and it's going against you, you got to respect the fact that no one's ever done it, no one's will do it, so just cut that loss, okay? And that's the difference between pros and amateurs. They know there's always going to be another trade, whether it be 5 minutes from now or 10 minutes from now or the next day, so you cut it. Most traders panic when they see red. You see that red number in your brokerage account. Oh, what am I going to do? A lot of people just close their account, don't look at it, they hide from it. But what if I told you the best traders expect red days? We know it's part of trading, and just learn to live with them and respect them. I mean, this is where I use a lot of sports analogies, and I think it's applicable. I know you hear sports analogies a lot, but no one ever expects to go the entire season and never strike out. No one ever expects to play an entire season of basketball and never miss a basket. But with trading, for whatever reason, you see that. People want to ignore it, bury it, forget about it. So here's how you should be handling losses like a pro athlete. A pro athlete, they miss a basket, they don't walk off the court and quit. They're like, okay, let's go down, play defense, and I'll make some adjustments next time. So why red days happen? And listen, a lot of the times it's out of your control. It's the market conditions. You buy a trending stock and the market's up and all of the euphoria is there, and then all of a sudden something happens in the world. There's a conflict somewhere, or the president makes a statement, or the Fed makes a statement, and that stock goes against you. You did your research, you did your due diligence, you had a good plan, and sometimes, as much as I don't like to blame luck for good or bad, sometimes the market just reverses on you. The market doesn't care about you at the end of the day. It's its own beast, and it's going to do what it does. And that's why it's so important to take losses, because you could fight Mr. Market, but Mr. Market is always right. You can look at the indexes, you can look at all of these price action, and you can fight it, but he's right. He always wins. You can fight him, you'll never win that fight. Now, the other thing that that's kind of like things you can't control. The other problem people run into is just non-ideal setups, poor setups, stocks that don't match the criteria we look for. Catalysts, high volume, good-looking chart patterns, all low flow, all of these things we look for. You hear me talk about them in a lot of videos. People will show me trades and be like, oh, hey, this one went against me. And I'm like, man, this thing had nothing going on. Barely trading any volume, no catalyst, none of that. Why were you even in it in the first place? The reason it reversed on you is there's no buyers. There's no buyers to push it higher. Then the biggest one, and the one you can really control, is emotional trading. Now, when I say that, that's chasing stocks. You see it in a chat room, you see it on Twitter or something like that, or you just see it pop up on a scan and you rush in because of fear of missing out or FOMO, or fear of profit or fear of missed profits. It's this constant emotional, I call it panic buying. How many of you panic buy? We've all heard panic selling, but you're like, oh no, it's going to leave without me, and you rush in. Then it reverses. You were impulsive, so now you panic sell. Best way to control your emotions is by having a process, going through all the criteria we look for, mapping out the chart, putting lines on your chart. Where am I going to buy? Where am I going to stop? Where am I going to take profits? Now, we'll never be robots. We'll never be, Spock from Star Trek, where we're completely emotionless. But the more you prepare, the more you plan, the more you map out your charts, you can lower that temperature and remove a lot of the emotions. So do that. Now, I know it takes a couple minutes, okay? My opinion is if spending a little bit of time to actually do a little bit of due diligence, I'm not talking hours here, I'm talking minutes. If I miss that trade because I slowed down to do this, so be it. There'll be another one. But I know through 20 years of trading, impulsive decisions, you always get wrecked. 99% of the time. 1 out of 100, you'll make an emotional decision and it'll work out, but the 99 other ones will erase anything you even come close to making on that one impulsive decision. So the right mindset is how traders use losses as learning experiences. Maybe you've heard this term. Think of your losses as market tuition. It really is that. So whether it be a $10 loss or a $100 loss or a $1,000 loss, take that as tuition that you paid to the market. So don't ignore that loss. This is where journaling comes in. And this is why I want you every day at the end of the day to spend some time to write down the good decisions and the bad decisions you made. Now, no one likes to do it. It's time consuming. It takes about 15 minutes. But by understanding the things you did right and the things you did wrong and actually writing it down, whether you type it or write it, you'll be much less likely to make those mistakes in the future. And don't bury your losses. People want to forget about it. Oh, I hate that ticker. I hate what I did. Learn from it. Back to the sport analogy. If a pitcher struck you out, go back, watch film, see what he did to strike you out, and next time you know that curveball's coming and you'll get a hit. And then the best part about journaling and doing all that is you can adjust your strategy. Maybe you're trading low float stocks and it doesn't work for you. Maybe you're swing trading and it doesn't work for you. Maybe you've tried the buy and hold, okay? Maybe you're trading too big of position sizes. Maybe you're constantly flipping bias. I see this very often. People go long and then short and go long and go short, or you're fighting the market. There's one of my favorite trading quotes is by Jesse Livermore. There's a time to go long, a time to go short, and a time to go fishing. Are you bullish in a bullish market? Are you bearish in a bearish market? Are you dialing back in a sideways market? Understand that. Ride the trend. Don't try and row upstream. Next, always have practical risk management, and based on what I like to say, a number, okay? A lot of people trade the same position size no matter what the stock is trading at and how much daily range it has. So you should always be, before you enter any trade, and this is another thing I want you to do as homework, you should be thinking about what's a small but acceptable loss for you in dollars, okay? Now maybe you have a $500 account, that might be a $10 loss. That's all you're willing to lose. Maybe you got a $5,000 account and it's $500. Maybe you got $5 million and you're risking $50,000 a trade. But that should be the max dollar amount you're going to lose on any trade. So if you go back to what I talked about earlier, when you map out that trade plan and then you map out where your stop loss is and your entry is, and then you extrapolate that out for a minimum of a 3-to-1 risk to reward, you can see how much per share you're risking, which allows you to set your position size. So maybe if the stock has $5 of range on the day, you're not going to be trading 1,000 shares of that stock. Maybe you're trading 100. If it's a lower price stock that's still a big mover and it's moving 5 or 10 or 20 cents a day, then you're going to have more shares. I see people that just pile in with the same position sizes and they don't look at the daily range. So understand that you can do that by using that methodology and mapping out the trades. Then at the end of the day, always mapping out your trades, whether you use a trade journal or a spreadsheet, or you use sites like Profitly or TraderView, you have to track your data. You can't do it all in your head. Everyone thinks they can, but you might find that you're trading setups that never work for you. Now, again, your brain will kind of trick you to ignore that. But if you're tracking the data, you're naming your setups, you're putting in the criteria of why you traded, the trade thesis, as I say, the volume, the float, and all of these criteria, you can go back and you can actually extract some value from that data. And always understand that there's gold to be found in there. Like one thing that I found, my biggest loss of my career was trading not a stock, it was actually an ETF. It's a triple leveraged ETF. This is back earlier in my career. It's probably been about 12 years ago now. And I knew nothing about any of these triple leveraged ETFs. It was just kind of like I was bored. I saw somebody mention it in a chat room. I bought it with way too big of a position size because, hey, I just need a quick move for a big gain. And that thing instantly reversed on me. I didn't know why it reversed. I didn't understand what triple leveraged ETFs were at that time. And by making an impulsive decision, trading too big and trading something I had no business trading because I didn't even know what it was, took the biggest loss of my career. So now what I did, I guess kudos to me, is I never did that again. I never made that mistake again. So even though it was the biggest loss of my career, I carried it forward as market tuition, and I didn't make that mistake again. So that being said, if you're wondering about how to lock these things in and do it every day, I have a mentorship program called the Daily Income Trader System. In the Daily Income Trader System, I do 2 live webinars every single day. We talk through these things, we track data, we do it all together, and it's the best way. And listen, I think I get better from helping people. I learn, you're never done trading. You're always learning, you're always growing and evolving. So if you want some more, hands-on, talking with a crew that's dedicated to your success, definitely check out the Daily Income Trader System. When you go to that link below, it takes you to a live webinar where we show everything that we do, and if it works for you, you can jump in and join. And in summary, what's the hardest lesson you've learned from a red day? Let me know. Did you make the mistake I did? Impulsive decision, trading something you were unfamiliar with, just looking for that quick gain because at the end of the day, I was bored. There was nothing moving, so I chased something in a chat room. But share your mistakes with me, and as I mentioned, the best way to learn and grow from those mistakes is to check out the Daily Income Trader System.